There we are. What's up, everyone? I actually have quite a lot to go through in this live stream. I wanted to say it today, but I already posted, of course, the morning update. But actually, there's a couple of changes with regards to the morning update scenarios because of Razor. And he paid attention, wrote me in the gold section in Discord. And then I checked some other opportunities. Now, with regards to the 1 hour time frame, nothing changed, but it does change some things on the 4 hour. So that's what we're gonna cover. Let me pop the chat on the screen. There we go. Okay, welcome everyone. It is great to have you here. Another day, another live stream. Let's stop the music. There we go. I'll be online for an hour, checking the chart till 3:30, and then gotta continue with the day. But yeah, some interesting price action. Of course, it's like a grinding structure to the downside, but there is two different ways I am counting this move to the downside at the moment. I gotta say, it already feels like the morning update is a long time ago. If you look at what happened, it's you know, in the couple of hours that we had since the morning update, actually quite a lot happened, right? Like, of course, we moved down, but the information you get. So quite interesting. I have a couple of stuff going on here as well that I will go through. This live stream will be Bitcoin focused. I won't cover alts because of the amount of stuff that I actually want to talk about with regards to Bitcoin. We did a few alts yesterday, and then, I don't know, the last alt stream, I guess before that was maybe around Christmas or something. But of course, we will pick that back up, especially if Bitcoin is doing nothing and is pretty much ranging sideways. But that is not the case because we had some nice action today. Of course, tonight, everyone, we do have some high impact news. Wednesday, January 8th, today, 8 p.m. Central European time. So make sure you trade safe, as that can increase the volatility on the chart. With regards to the levels that I have on my chart, you can see all of them here. Actually, this one is not relevant, so hide this. These are currently my relevant levels, so to speak. So the red line here is a point of control, just so you know what you're looking at. It's a point of control of this area. Then we have a daily naked point of control, as you can see. If you would use the indicator of Leviathan called Market Sessions and Volume Profile, and you would put this on weekly, then you will also see that there is a weekly naked point of control at the same level as the daily naked point of control. And just below that, we have a daily here at 92.6K, which basically is the final boss of support, because if you lose the daily, you're basically taking the low, right? Like there's nothing left. Now I got a target box here because this is the priority area, but the daily is on my chart because it's the final level. And the reason also is that I know from experience that at times what Bitcoin does like to do is have a little quick wick into the final area of support and then go back up. So I do tend to have a level outside the box on my chart now and then. And then the daily naked point of control is an important area of resistance, 98.1K. Now, we're going to talk about Elliott waves in this live stream, and got some new stuff on the 1 hour on how I count the move down, and also new stuff on the 4 hour compared to the morning update, which was posted, I don't know, between 7 and 8 or something. So welcome everyone. Gulian, what's up? Love your content. Cheers, man. I love hearing that. Like, it makes me happy. That's why I do it. I never planned actually to, I don't know if you would call me a YouTuber nowadays. I don't really call myself a YouTuber, honestly, but yeah, I never expected everything to happen as it did on the channel. Just started to make videos because of questions I received, and now we're here. Holy moly. A lot has happened since then. WJ Young, what's up? Ali. In Dutch, is it possible that you can get a bigger ABC to the upside? That is possible. That would be a zigzag, but let me explain that during the analysis. So if you do bounce from support and you create an ABC zigzag. I think 100K is very interesting as resistance. Then you can, of course, see continuation to the downside. Yeah. Aggressive wave 1 of C and the overall wave 4. Yeah, I don't know. I'm not a fan of the wave C. I can't deny. Everyone looks at the ABC, but we'll cover that as well. And I don't like to think like everyone else. I do have it on my chart because I keep it in mind. And of course, I trade it. If the opportunity is there, you got to take it. With this move down yesterday, I traded the whole move down. Let's see, my first entry actually was at 101.5, but then I sold in this or bought back, I suppose, closed my position in this range because I was not sure what was going to happen here. We were on the 0.5, didn't yet invalidate wave 4. But then as price started to move, we touched the 886 in this. Let me actually explain. So, okay. Before we do the analysis, a little bit of my trading explanation. Now, I posted some of the recent trades that I've done on my Instagram story. I think it's quite fun to put some of the setups that I trade and some stuff on my Instagram story. I basically take a screenshot of my Blowfin page, and you can see like the arrow where I bought and sold, and then I explain a little bit of the why. Now, this move to the downside, the first sell order I had was here, and I actually posted this in the gold group because we were simply chatting. And then I got out of my position in this range because we had the 0.5 here, maximum target for a wave 4 in case we would have a 4 and a 5 up. But then we had big bearish CVDs coming, and the moment here we touched the 886, I sold again over here because the 886 increases probabilities to take the low. I even think we were live on YouTube when we touched the 886, and I actually, during the live stream, you can probably see my eyes focusing on the other screen. I was putting in my order. I was market selling. And then I took this right to the downside, and then the moment we had two levels here, we had a daily naked point of control and a weekly naked point of control. The moment we hit the daily, that is when I got out of my position because that was my target. That was my plan. I planned to trade back to that support level. And this morning I actually got into a short as well. But I put my stop break even once, for reasons, Elliott ways, and then I literally got stopped at break even. So yeah, no problem. But that was a very, very nice day. Actually, honestly, this move to the downside was actually one of my biggest trades that I ever had. So, which was also partly a reason for me to get out of the trade. I'm generally quite good with my emotions, but I just wanted to get rid of my of my position. I was happy we hit support. I was good, Looking forward to hear the great TA. What's up, Ivan? Maybe a Band-Aid, Ice Cubes, lady. Welcome. Maria, Alpha Vision, U Sport. What's up, everyone? For Thailand, living the Bitcoin live. What's up, Patrick? Last time for me to follow the live, making us up for Thailand. Enjoy Thailand. Enjoy. Holiday coming, right? Enjoy, man. How long are you going to be staying in Thailand for? Moving out, I believe, of Spain? Yeah. Zed, welcome. Hannah, Victor, Jeffrey, Rahul. I can't help but thank you for your TA, always accurately pointing out the different scenarios for us mortals. Cheers, Albert. By the way, of course, I have the chat on my screen and the webcam is there. I do have a prompter, but I think it's nice if I have the chat on my screen so you know what I see, right? But cheers, Albert. Actually, this morning in the silver update, I forgot price was moving and I was thinking about scenarios and I forgot a scenario, and then I said, okay, I'm actually human, I'm not AI. Christian, welcome. Can you explain, I don't know where you pulled that fib pull from. I will, let's start. Martin, welcome. Sam, what's up, man? Sam from Austria, popping in. Vienna, welcome, man. Okay, U Sport. Okay. Well, I might be able to answer your question during the live stream. So let's start. Now, again, these are the levels I keep an eye on, right? So the box, the daily naked point of control, and the white area, but that's for later. Let's now cover the scenarios, and there's changes, right, compared to the morning update. Let me explain why. We have to go to the daily. So on a daily time frame, I did not explain this during the video this morning, but in the daily time frame, currently this is your higher probability scenario, which is still bullish, taking out this high at a later stage, which is perfectly fine. And then your bearish scenario is a finish structure, lower probabilities, because your wave 4 in blue is very short compared to your blue 2, right? And that is quite simply less common, as more commonly 4 is longer than 2. Not the case, right? So therefore, we're looking for this. Now in the morning update, I think there was on the 4-hour time frame one scenario, maybe two, I don't know, that I shared where there was the possibility for a bigger W, X, and a Y that starts here. The issue actually is, and this is what Razor pointed out in Discord, because he wrote me, he said, yo, from a time perspective, right? And that's where the question asked, and I was like, yo, you got a good point here. I actually completely forgot about time. So if you have a structure, a single structure that is this long, it's difficult to match it with potential 2s, right? Because the wave 4 actually starts to be very long. So from an Elliott wave point of view, it makes more sense to have a finished structure at the high and then count a different structure here, right? So this is all wave 4, right? Price action, right? That's what we're looking for. So this is your target area for a wave 4, by the way, in validation 77.7. Now with that in mind, I then changed some of the scenarios a little bit that I had on the 4-hour time frame. So we're going to focus on this part of the chart, okay, here, this section. Okay, so the first scenario, and okay, I also updated my polylines, right? So these are the polylines, but I'll get to this in a second. So on the 4-hour, I have 4 scenarios. Sounds like a lot, but the polylines, which I will explain soon, will, you know, it gives a very easy overview of what we're basically looking for. Now, first of all, and I mentioned this as the first scenario in the video, same, nothing changed here in this particular case, is the ABC zigzag. Now, this is the scenario that your grandma, your dog, and everyone else on the internet is actually looking for at the moment, which to me is it's like an orange flag. It's not a red flag, but I don't like it when everyone thinks about the exact same thing and everyone has the same structure. Of course, it is on my chart, right? I'm an Elliott wave analyst. I need to have it on my chart to at least consider this scenario. The issue is I don't like it because everyone thinks about it. Secondly, this wave B is quite long, right? It almost reached the 6 fib time, basically meaning that your B is almost 6 times longer than your A in time, which is not common. It's not an invalidation, but it's also not common, right? So at least something we keep in mind, I suppose. But then again, time is not an invalidation, as mentioned. The real invalidation for this scenario is 102.7K. So we keep this one in mind. Now, this move to the downside at the moment, as you can see as well locally, is slowing down. So instead of having a straight line to the downside, which honestly would be preferred if you're actually looking for a wave C, just like your A, get a similar C to the downside, it arguably would make more sense to follow this red line instead, which creates a bounce and then a move to the downside. Common target for your C is 86.4, 82.6, right? 76.4 can still be a target, but the problem with this target here is that it is below the invalidation of the daily time frame wave 4, right? Which is at 77K. So therefore, this would be your main area. A second thing is that if you're looking for an impulse, 1, 2, 3, 4, 5, then most commonly your 3 is the highest volume, biggest move. Now your wave 1 is quite long for an impulse, 1, 2, 3, 4, 5, right? Preferably you had a smaller one, get a 2, right? Had a wave 1 ending somewhere here on the order block, get a 1, get a 2, then get a 3 that pushes below the lows, get your 4 and get your 5. That would have been a much nicer impulsive wave C to the downside. Now you have a very long wave 1 here. You need a 2. Commonly your 3 is the biggest structure out of 1, 3, and 5, right? So, okay, well, if we pull a trend-based fib from the high to, let's say, the low somewhere here, and then move back up, where did I have my resistance? Okay, let's see, 100. right? And then you have your wave 3 target, the 1.618, right on top of the box here, about 87.4, 86.9, right? Oops, I removed something. Okay, there we go. And then you still need another 4 and another 5. So that's basically what this represents, right? But your 5 has to be quite short, no? Compared to your 1 and your 3. So yeah, it's one that we keep in mind. It's just that everyone is looking at it. So, so this is where it gets interesting. Let's look at scenarios that not everyone is looking at. And interestingly, as you can see, the polylines, which is a summary of the price action of the different 4-hour scenarios that I'm showing you, the short-term movement in most of all these scenarios is similar. So as complex as it sounds, it's actually quite simple. The only invalidation for a bounce to the upside is this red line, which is your wave C continuation to the downside. Right? All the other scenarios are actually looking for a bit of a bounce. So some other stuff. Remove this, get to the range. So what you look at here is a sideways WXY. Now, mind you that this move to the downside, I spoke about it in previous live streams and also videos after this move was finished when I was making videos in this period. Well, actually, this was also Christmas, so I wasn't very active. But in a couple of pieces of content here, I analyzed this structure, and one of the scenarios I once had on my chart was a WXY. Another one was an ABC. I may actually still have it. No, it's not here. I don't know. It's not in my folders anymore. However, this structure to the downside here, in many cases, by many people, of course, is counted as an impulse. Now, if you count this move to the downside as an impulse, you start with 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5. Cool. Now, to put it on the, am I going to put this on the chart, or you may get the idea? But basically, this is your highest degree impulse. Then you have another 1, 2 here, and then you have another, right? It gets messy. Impulse here. Now, what you can see in this case is that your wave 4s are very long compared to your 2s, and your blue 4 is longer than 6 times your blue wave 2, which is incredibly rare. Something to keep in mind. Another thing is that every wave 5 is very long, because your wave 3 of 3 of 3 of 3, which is this tiny move here, you would expect most commonly for the wave 3 of 3 of 3 of 3 of 3 to be really big, but that's not the case here. It's actually quite a small move. Now, of course, your blue 3 and your green 3 are very big, right, compared to the 1. It's just that the white one is quite small. But that being said, it's mainly the 4s that bother me, because as price moves down here, these ranges are all quite similar in size, interestingly, right? So that is why I thought, okay, what's the chance of a WXY, or alternatively, a potential ABC, which is of course a 5-3-5 structure, either A, B, 1, 2, 3, 4, 5, C, right, like this, or this is what Smith has on his chart: 1, 2, 3, 4, 5, A, B, and then 1, 2. This is your 2 here. 1, 2, 3, triangle, 4, 5. Not a triangle because we took the high, so WXY, ABC, whatever, something here. 1, 2, 3, 4, and then a 5 to the downside. So that is stuff that we have been at least considering. And with regards to considering structures like that in the move towards the downside, you get to scenarios that are different than what everyone else, of course, is putting on their chart, which is interesting. So here we then have our W, which has to be a zigzag structure. Then we have our X, which of course is almost 6 times longer than your W, right? The way it is. And then we are looking for a wave Y, which can be a zigzag, a flat, or a triangle. Now, it's too early to call triangles, because for a triangle, you need a zigzag to begin with, and then you have your B, C, D, E, and you continue. So triangle, not yet relevant. The zigzag to the downside would be a double zigzag W, X, Y. So you can see that the similarity is there, right, between The previous scenario, red line, look at the red line, look at the blue line. The main difference is you will never get a 4 and a 5. Basically, people are going to count this as a 1, 2, 3, 4, 5, but instead it becomes an ABC and it reverses. It never goes back down, right? Something to keep in mind. So that is a similar price action for a zigzag A, B, C. So you're then looking for a bounce and price to move up. Your flat would be A, B, C. The issue for a flat is that your wave A has to be a 3-wave structure. At the moment, highest probability is that this is an impulse. So you would need a 3-wave, then a 3, and then a 5. So actually at the moment, arguably you can say that that one is also not yet relevant, leaving us with this beautiful line on my chart. Now a WXY is still a possibility, double zigzag. So zigzag X zigzag, still a possibility as we didn't hit the 0.7 fib from the high to the low of W. The 0.7 lowers the probabilities for a double zigzag. So it's a lot of talk, but basically what I'm saying is the price movement is very similar. The main difference comes later. Instead of a 4-5, you just go back up. Everyone waiting for the final move down, they are going to be waiting and buying back at higher prices. So one to keep in mind. Now, the most bullish scenario, which from a psychology point of view would actually be quite interesting, as of course you do have the people, oh here is the one of the ABC versions, but let me remove it. You can have ABC or ABC. Of course, you have those scenarios where people look down. Now, you always need a scenario where you actually go up. And it's just interesting to think about it. And this morning, I had a little bit of thinking because I was like, can we get a bullish scenario out of what we have here? And we actually can. Now, I got to say that the probabilities are a little bit meh, but there's no invalidation. So first of all, your W is the same as the other scenario, the previous one. Your X is finito, right? And then in your wave Y, you create a flat. Now in this scenario, due to the structure that we have here, your wave Y would become a running flat. A running flat is the rarest flat structure, right? So it affects the probabilities. Expanding flat is most common. Then you have the regular flat, and then you have the running flat. So running flat basically means A, B, C. Wave C in blue does not take the low of A. And that's the rarest structure. So of course, that's something to keep in mind. And also, this is a sideways WXY, right? Sideways double combo, but your wave X is incredibly shallow. In a sideways, it's not an invalidation, right? But in a sideways WXY, preferably, your wave X retraces to at least a golden pocket, if not higher, in this area, right? But we didn't. So of course it affects the probabilities, but there's no invalidation, right? There's no invalidation of this scenario. And then lastly, if you compare the time, of course, of your W with your Y, then your wave Y now is approaching a 5 fib time compared to W, meaning Y starts to be very long compared to your wave W, which also lowers the probabilities. So from a probabilities perspective, it's not like, wow, this is your highest probability scenario, but it is definitely an interesting one. And if you then compare it with the other scenarios, I just dump it on the chart, everything together, you can see that the price action initially might be very similar, right? Again, this is the outlier here. You just continue down. But with the support here, looking for a move to the upside can be very interesting. If this is a 3-wave structure to the upside, this move, if this is a corrective move, we look for blue or red in this case. If this is an impulsive move, we could look for green. Okay. And then I have another one over here. I don't know if this one is even worth I apparently made it in a folder, but I was just considering what's the chance of A, B, C, but too early. So this one is not yet relevant. And also here, you would still expect 535, so move to the upside. So I'll remove that for now because it's not, it's too early. So from a polyline perspective, These are currently the polylines, which basically summarizes the different scenarios explained on the chart without all of the magic, right? It's very simplistic. Probabilities from an Elliott wave point of view are, as per the morning update and also the title, looking for a bit of a bounce, right? We had a quick move to the downside. Now we start grinding to the downside. I'll get to the 1 hour in a second, right? It's like a grind. It's slow, slow, slow. We have some support just below us as well, but it becomes more interesting to actually look for signs of strength and look for a bit of a bounce, as in most of the scenarios. That is your higher probability. I leave that one. And then depending on the structure to the upside, either corrective or impulsive, you look for blue or you look for red. Okay, 1 hour time frame. So let me have a quick look what I had here. Okay, so these are the old two. And then I need to include, I have a lot of stuff to talk to you guys about because I've been counting this morning, which of course is also my job as I'm a trader myself. You know, I need to update everything. Have some water. So now earlier this morning when I uploaded the video, price was when did I start recording? When I uploaded the video, I bet price was somewhere here. I'm not exactly sure. This move down happened, I believe, after I recorded, so maybe we were here somewhere. But in the meantime, actually, quite a lot happened. So I had to update some of my structures here at the low. In general, of course, we were looking for a bit of a bounce. No, still a bit of a bounce, and I explained the support to the downside, which is the blue box I have here on my chart, 93.5, 94.2. Now we did hit support, which is this folder. Now this gets very messy, but sometimes I like to do this. You won't see me do this very often. I was like, okay, let me just see what the volume distribution is. And I just put a lot of different volume profiles on my chart, just to have a look at, are there any similarities with the support that I have down here. Now, currently you have a bit of a value area here and an order block. You can see here, order block and the value area, right? And just below, we actually have the point of control. We have a daily naked point of control, and you know, we have some other stuff. So for example, right, there you go. And if you want more, there's the weekly, right? So yeah, we have, of course, a little bit of support, value area low, and the little order block over here. But then from an Elliott wave point of view, this morning as price moved down, I put the following on my chart. This is number one. I'll talk about both of them. And this is number two. Okay, let's start. So clean up the chart. Price decided to grind to the downside, and do so very slowly, right? With a lot of overlap here with the low, overlap here once again, right? And the moment you see that type of overlap, it becomes interesting to look at diagonals. Now, your most bearish scenario, by the way, is a multi 1-2, 1-2, 1-2, 1-2, and you just continue dropping, which basically means if we would count that is an option, but not the highest probabilities. If you count 1-2, 1-2, 1-2 here and you drop, then support should be peanuts, and you should follow the red line straight to the downside, right? That is your bearish scenario. The other scenarios lead to a bounce. So what you look at here is a multi 1-2 that started to move down. Then we have our small 4, and then our 1, 2, 3, 4, 5. Right now, the invalidation for this scenario is 94K. Not allowed to see price move below 94K, and this red point of control is above 94K. Now, if price is going to move above 96.1, then these three have to move to this low. which then means that in this scenario, you would now be looking for a three-way structure to the upside in a 4 and one more drop to the downside in a 5 to create a 1, 2, 1, 2, 3, 4, 5, 4, 5. Interesting resistance to the upside is the daily naked point of control at 98,150 in confluence with the 0.5 and the lower degree wave 4, which is an important detail as a wave 4 of a higher degree tends to retrace to the price section of a wave 4 of a lower degree. So a little bit of confluence there. Invalidation for 4 is a 618 at 99.1k. And then, of course, we still have our 5 to come. So one more move to the downside, basically, right? In other words, we're looking for a bit of a bounce in this particular case. And in this scenario, it's an expanding diagonal. Now, I know expanding diagonals are not common, but it wouldn't be the first time that after a very quick move, I would see a really stupid structure like this. So what you're looking for here is a 1, 2, 1, 2, 3, 4, 5. So wide 5 finished, finishing 3, then a 4, and then we get our 1, 2, 3, 4, 5. Invalidation is taking out this high at, again, 96.1k. And in this particular scenario, what I actually would prefer to see is for price to hit the point of control, come back up for 4, and then another move down in 5 to stop out the early longers, basically. So in other words, what would be preferred in this case is actually for price to move down again and actually form 3 here. But that's just liquidity stuff, not really Elliott wave related. So anyway, 1, 2, 3, 4, 5 expanding diagonal. In that case, invalidation is very, very clear. Okay, so yeah. And the bearish, of course, again, 1, 2, 1, 2. You need another 1, 2. In the moment you, let's see. So the moment you change market structure and you take out this high is also the moment that the multi 1, 2 basically goes out the window, right? And the diagonals remain with a bounce in a 4 and possibly still a 5 down. So those are the 2 1-hour scenarios where if I would put a polyline on my chart, then in this case, we would be looking for a wave 4. Point of control is interesting. Then get a wave 5 down and then look for a bigger bounce back to the upside. And the other scenario, well, arguably the polyline here is on the chart, but here you then already that one. Here you would already look for a bigger move back to the upside. So you could see a move up, hit the daily naked point of control, retrace, and then go back up again to 100. That's the difference between the 2. So yeah. So that's the 4-hour and the 1-hour time frame. So if we then talk about probabilities, I suppose, right? Then on the 4-hour time frame, there we go. The probabilities are higher. Oh yeah, let me explain this. For a bit of a bounce, also due to price is moving down, but you can see that volume is moving down as price is making lower lows, which is typically what you like to see when you move into wave 4s and wave 5s, right? Because a traditional impulsive structure, right, you have your 1, 2, 1, 2, 3, and then you get your 4, 5. So basically, you have a grind, you have a quick move, and you have a grind again, right? And then eventually, you then get your return back up. It's not very common to then get another big drop. So that's basically what red here implies. But the probabilities would be higher for a bit of a bounce. Yep. Yeah. So this is 4-hour, right? 4-hour probabilities, higher probabilities for a bit of a bounce, and then on the 1-hour time frame, it basically shows those probabilities. So yeah. that is what we are looking for. Keeping an eye on the support that we have to the downside. Still, of course, we have some extra support. We have hit at least a bit of support, which was on the 4-hour time frame. A bit of an order block here, and the value area low, remember from the analysis. Arguably, the daily naked point of control below us would be more interesting, in my opinion. But yeah, we'll see. So yeah, 4-hour time frame, looking for a bounce. If the structure to the upside is a 3-wave corrective structure, we look for continuation down. If it is impulsive, though, it could be very interesting, no? And yeah, on the 1 hour we have the diagonals. So if we do move up, maybe even during the stream, hit 96.1, then what I'm gonna do is put 3 here, and then be looking for 4 and be looking for 5. Yeah. With the other one, of course, being an expanding diagonal. Et voilà, mon ami, c'est tout. Oh, my pinned comment. Okay, Elliott wave analysis at, I think we started somewhere 17 min. Chatting and Q&A. 15 minutes, hit the 886. Let me have a look here. Not sure which 886 you mean, because the only relevant 886 here is taken from the low to the high, right? And the 886 here is not touched because you're in a downtrend, right? You're in a downtrend. So the only 886 that is relevant here is every 886 you pull. So low to high, toggle on the 886, right? That's relevant. Now this is a perfect 886 example as well, which was the reason I actually took my short earlier. But 886, golden pocket, and then we took the low. So that's the only one that is relevant. As long as you're in a downtrend, you want to pull your 886s from lows to the highs. And only when you start to really change structure, that is the moment when you can switch around and then pull your 886 from the highs to the lows, right? Which, by the way, the reason, so I explained my short position that I took on the 7th of Jan yesterday. Of course, I entered here for Elliott wave reasons, but then I closed here. Also partly Elliott wave reasons, potential for a wave 4, because this was the 0.5 Fibonacci for a potential 4 and 5. Then big bearish CVDs came in, but look at this, take a fib from the low to the high, and guess what? Look at this. 886, move back up. High probabilities after an 886 touch to take the low. Low probabilities to take out this high. It's most common after an 886 touch to indeed see a bounce, but actually to not take out the high. That is relatively uncommon. It of course happens, especially in an A, B, and a wave C, right? Maybe a WXY. But the most common structure you see after an 886 touch is a bounce and then continuation. So as we hit the 886, that was a sign for me that the drop was coming, and then it's just management. So and then of course we already were in a local downtrend here since we broke structure. Yeah. So New York will open in a bit. Yeah, true. In 20 minutes. So could be interesting, of course. Maybe a band-aid. I don't know what you mean. Do you mean you use the link? Thanks for the support. That's another euro, I think. I don't know. In some countries, actually, it doesn't work. I think the US, it does. but in some countries you're affiliated per country basically. I think the US is in my list though, and then I think you get like 4% of the price of something, so that's like €1 maybe or so. But cheers, maybe a Band-Aid. Let's have a look at what's been written here. Where were we? We were here. Ivan, welcome. Christian, what's up? Sport. Hopefully your question was answered during the analysis. Martin, goedemiddag. 2 months this time. After that, back to Spain and making us up for Ibiza, USA, Canada. Shit, such a bad life. So Patrick, everyone, he is the founder of a YouTube channel. 1 second here. A Dutch YouTube channel where they sold everything they had and they put it into Bitcoin at around 16 to 18K. Let me find their channel here for a second. There we go. Just Bitcoin free family. 1.5K subs. It's coming home. So here you go. Just be free family. And they currently stay in Spain, but apparently they go to Thailand and then all the other countries. So with the kids, and they basically share their journey. Now it is Dutch, so for the Dutchies that are here, could be interesting if you want to follow their updates. But yeah, Ibiza, USA, Canada, not bad, not bad. Divine Hood, I know you say you didn't like the big AFC correction because the time of the wave B, but could that be wave be extended in time because it was over Christmas and the holiday time frame? That is a more fundamental reason, I suppose, to at least keep in mind the extended wave B in time. So yeah, I mean, yes, it can be a fundamental reason for the fact that it took a while for the B to form. Very sideways price action, of course. So yeah. Again, it's not an invalidation, but it's also not ideal. But in some scenarios, just like the WXY, you also have X that's very long. It's the same. It's basically the same count. It's just instead of a C, you get a Y. That's the main difference. Let me actually check CVD. We haven't looked at the CVD. No bearish CVD here. The bullish one here played out. The bearish one earlier played out. We had another bearish one here. But locally, let's see, 5. Loading. So the first CVD, this one is interesting. But the first one played out. So show the inner div. So you can see here the first one played out because we took the high. This one now becomes more tricky because I don't like a second CVD with the same pivot. It's not my favorite. And with this low, we do, yeah, wait, 3 minute too high time frame. Yeah, so we don't actually have CVD divergences with this particular candle here. So, oh yeah, it's too low time frame for me anyway. I like the 15 minute. So, oh, I forgot to pin my message. There we go. Harrison Lee, you're one of the best Elliott wave analysts I've ever found. Your channel is truly a hidden gem. Keep up the good work. Thank you, Harrison. Thanks for popping in and writing a message. That's very kind of you. I'm happy to hear that you enjoy the content on the channel and the analysis as well. Hopefully it is clear. If you have any feedback, that counts for everyone, of course. If you have any feedback, please let me know because the channel can only improve with the help of feedback. But yeah, I'm happy you enjoy the analysis and the way it's presented. So thanks, Harrison. Appreciate it. You can really make a day having fun messages. Cheese. Always popping in. Always writing comments as well. What's up, Cheese? How you doing? Been here for a while already. Ali, ik bedoel dat dit dan een wave B is en dan wave C naar tussen 106. Oh, dit is een wave B. A wave B has to be a three-wave structure. So if you want to count the move to the downside here as a wave B, right? So this structure, it needs to be a three-waver. It is, however, tricky to count this as a three-wave structure, as you can imagine. So if you want to move to 100 and what's the number? 106, 108. I would look for other structures than for a B, for example, I would then look for this. Yo, I need to drink more, right? Now, this would, of course, be very interesting trading-wise. Holy moly! So you need a three-wave structure in a B. Oh, I completely forgot about it. Look at this. No, not this. This. Shit. There's two more things I forgot to talk about. Wait, what's the timestamp here? 52. Okay. Two more things that I like to talk about, actually, which is bars pattern and what you see here. So this move to the upside, right, by many is, of course, counted A, B, and then a wave C. Cool, right? So wave C, 1, 2, 3, 4, 5. Now this morning, of course, the moment the low here is made with this structure here, and then you have here an overlap, right? So you can't count 1, 2, 1, 2, 3, 4, 5, 4, 5 because of the overlap between 1 and 4, not allowed. So a different way of counting that move to the upside is as a three-wave structure in a double zigzag. So you have an A, B, then you get your wave C, right? So your wave C basically is as a wave 3 in other people counts, right? So 1, 2, 3, 4, 5. So your 3 and your C are the same. But then it creates a W. Then you have your X. And then this is quite interesting here. If you look at the high, you then have, this is very ugly. Very, very A, B, C. Yeah, it's an ugly move up. But anyway, you have a first structure up, right, wherever wave A begins. Then you have your B, and then 1, 2, 3, 4, and a 5 in a wave C. Now we actually never took out this low with this wick, and this move to the downside counts best as a W, X, Y double zigzag, which basically means that the only, if you want to count this structure here as a single corrective structure, it needs to be a flat in an A, B, C, because wave A can be a W, X, Y, but nothing else. You can't have anything else starting a corrective structure unless it's a flat A, B, C. Triangles very, very rare. So, but yeah, then you have your minimum target for a wave B, which is not reached. I'll explain why this is important in a second. So if you count WXY, which is fine, if you want to try and count this ABC, first of all, this is very much a three-wavy structure. Second, you didn't hit the 0.9 for a flat ABC, right? And you didn't take out the low on this chart, which means running flat. However, if you then look at this move to the upside, if you actually wanted to count an impulse, then 1, 2, 1, 2, 3, 4, 5, 4, 5 would make more sense, no? Because you have two 1, 2s in that case, so you want 2, 4, 5s. But where is my second 4, 5? We move to the downside. You can even, in my trading, in Blovin, you can see my doubt here in particular. Because I didn't really know, like, at that moment in time, like, yeah, we had bearish CVDs, but we didn't yet have a break of structure and that sort of stuff. So I didn't really know what to do. And I'm basically missing a bit of a 4 or 5, which which begs the question, is this last move up a 3, not a 5? Because if this is a 3-wave structure and not a 5-wave, meaning full of all, like a 3-wave structure, because the last move, then you cannot count this as a flat. Which plays a role in, 1 second, not that one, not that one, but it does play a role in this one. You can see the WXY here on my chart. And this would be your, basically, like, everyone is looking down, but imagine the opposite happens. So it's just something I keep in mind. And because I analyzed this structure up here, and I was already struggling with it, that is when this scenario came to mind. So I just have it in my mind. Of course, alternatively, you would need to count this as a wave B, right? A, B, C, which is then a flat structure in a bigger corrective move possibility, right? This is how to answer the question, because this is where it started with Ali. This is how you could get to like 106, I suppose, 105, 104, and then see another move to the downside. So, yeah, I got, it's a lot of detail, I know, but it's an interesting way of thinking. And move to the upside. Hello from St. Louis, Mike. Welcome. Good to have you here. Hello from Nice, south of France. Ahmed, shouldn't Y need to extend at least W in the bullish case scenario, which you mentioned Y is a running flat. It will not reach the 0.618 if it is a running flat. Correct, because the wave Y target is actually down here at 89.6. And the most common target for Y is the 0.618 to the 1.236. So that is correct. But the 0.618, that's where your common target area starts, right? It's not a must-have, but that's your common. So, yeah, even in a WXY, you don't even need to take the low of your W. But structure is more important. So it's just a scenario I keep in mind. That's the whole idea of, hey, we have the bearish scenarios, all good, everyone has them, but is there also a bullish scenario? And yes, there is, but it might not be, as mentioned in the analysis, the highest probability scenario, because, yeah, for additionally, as a fourth reason, your Y is very short, your X is very long, your your Y is long in time compared to your W, your Y is short in length compared to your W, your X is very shallow, and you have a running flat in Y. So those are the four reasons. It's not great, but it doesn't invalidate it. So we got to be aware. Can you check SPX local? That would be for another stream. I only want to do Bitcoin. I got to go in like 7 minutes. So... Hash, what's up, Patrick? Thanks for the support. Pleasure, man. For the Dutchies. Alpha Vision, mon ami, thanks. That would be also for an alt stream, because I don't have, like, I have an hour in my agenda every day for a stream, because and this is a year where I really got to stick to my agenda, because I really love productivity. I don't know if Versen is here. Is Versen here? He didn't write yet. So, because if you're actually, I don't know if you can visit the live stream, but if you're watching the VOD, let me know when you're here, so I can talk about how I organize my day with all the different blocks. And because I got a comment from Versen that said, I love that productivity stuff when I was talking about it and how I organize my mobile phone with all sorts of focus modes. And he said a comment like, interesting, do you have more of those things? And actually I do, but I don't know, whenever Versen, if you see this, let me know. Waiting eagerly for the compendium. Yeah, so the compendium, the book, I basically have the planning. The maximum launch time should be for the download, it should be around April-ish. And for potentially a hardcover, which is eventually the goal, I'm aiming for June. Might take longer, but I want to have a hardcover as well. I want to have my own Elliott Wave book in the closet. Plus, I love books. I love physical stuff. I always buy books, like physical copies. I never do online, and I just like the pages. I like to hold them and read from the page, not the screen. That's just a habit, I suppose. So yes, it is true that it is a different CVD because we are looking at different updates and tests. And whenever there is an updated version or we're testing stuff, then you will see me use a newer version. But we're still testing, bug testing, updating things. Well, what's nice is you can actually see how many play out. You know, sometimes you get the question, do you use it and does it actually play out, and you know, that sort of stuff. And then now it basically gives you automatically the metrics. So I can zoom out, like you have to move to the, what are we going to do? 1 hour? No, 30 minutes? It doesn't really matter. No. You have the reason move to the upside and the downside. And then I need to show the inner divs because those are all the small divergences. These are all the divergences that happened in this piece of the chart, what is visible, right? If I go to the left, you can see it automatically adds all the other ones in the calculation. But here, you can see that all the CVDs, right? Bearish CVDs, 11 played out, 7 got invalidated. Bullish CVDs, 30 played out, 16 invalidated, uncertain 3, right? Now, of course, if you're in a bearish structure, the bullish CVDs, you don't want to look for bullish CVDs when you're dumping to the downside. Similar, if you're having bullish market structure, of course, you're not really looking for bearish CVDs. So, of course, you can improve the metrics just by literally knowing in what structure you're in. But even if you would only trade CVD and you enter with CVD and then you take your profit when the CVD plays out and stuff, I mean, it's a profitable thing. So it's not bad. And of course, there's statistics literally on all of the time frames. We don't have daily time frame too much because on the daily, we don't have enough data yet, collecting data and all of that stuff. But yeah. If I show inner diffs, if I turn it off, then you don't get all of those mini lines and you only get the big line. Now, this bullish CVD to me, by the way, is not interesting. Just like when we moved up from 49K to 65 and then we came back down. This one is not interesting to me, right? For me to be interested in bullish CVDs, I need to see bullish market structure locally with additional bullish CVDs. That is interesting, right? The bigger bullish one is not really interesting. So, yeah, it is indeed an updated version. Seeing a ton of people pushing the logic to get short now. Yeah, yeah, and look, maybe it works. It's not something I'm looking for. You know, I had my short. I was happy with my short. I'm out of shorts at the moment. I actually tried another short earlier today, but I literally got stopped with this small move up. But I was looking for the potential of an impulse down. And it got invalidated because it was break even. So it was I entered because we had an 886 touch. So I entered due to the 886 touch. And then price moved down, right? And then as price moved down, it also touched the 1.618. And because it touched the 1.618 here, the probabilities for a flat ABC are very low. So this is where I added to my short, which made my entry right about here. Because I wanted to have my entry on the invalidation of an impulse. And if you would look for an impulse, then it would have been 1, 2, 3, 4, 5. The invalidation for a wave 4 is the 0.618. So I calculated my position size in such a way that my entry that I took a little bit higher would move to the 618. That is then pulled from the high to the low. So my new entry was there, but then price came back up and it touched the 618. So I got stopped at break even, but therefore I wasn't looking at the idea, the plan I had was invalidated. I was looking for 1, 2, 3, 4, 5 to support. That would have been interesting. And even we could still reach support, but my idea is invalidated. So I'm not part of, like, I'm looking for longs actually. Yeah. So yeah, just waiting, observing. Divinewood, thanks, Divinewood, as well. Yo, guys, what a great day! Such kind comments as well. Thanks, guys. Happy to have you guys here. And make sure, if you just joined, please make sure to check out minute 17 onwards, because that is where I covered the analysis and everything you need to know about the daily time frame. That's why I started. But then in detail, the 4-hour and the 1-hour time frame. So that is where you'll find a lot of the information. Because I got to go, well, it's now 3:30, so basically right now. So quick scroll. At away from December to November. Ooh, the monthly, the impulse from that low to where we are. Oh, Tres, I think it would be very interesting to look at the very high time frame, right? The low of 2018, 3K, to then where November 2022. So that's, what was that, 69? Or was that the 65? I forgot. The impulse from that low to where we are now is a wave 1 or 5. Well, if it is a wave 5, then this move to the upside would be corrective. Because you expect a bigger corrective structure. Yeah, so I actually have, if you go to my YouTube channel, I do have a playlist on the homepage that covers macro stuff. Here we go. 4 weeks ago, but you know, on the monthly, nothing changes basically. So this would be good to check out. It's 11 minutes, and here I cover about some of the structures on the monthly time frame. Oliver. Yeah, there is a weekly naked point. So interestingly, I don't have it on Atas, I believe, but with the indicator by Leviathan called Market Sessions and Volume Profile, if you put the setting on weekly, then you can see a weekly naked point of control here as well. Correct. So in addition to the other stuff that does sit there. Have you tried the CME charts? You might get better timing in your wave since it does not trade weekends all day and running the market currently. I actually never analyzed the CME chart. So I actually wouldn't know what it's like. Now, crypto, of course, is a 24/7 system. Asset class, I should call it, no. So a 24/7 asset class, and the information that I get from the weekend is very relevant for my Elliott wave counts. Of course, most commonly the weekend tends to be sideways, but even if it is sideways, it's very relevant. Are we looking for B, X, 2, 4, right? So I do really enjoy charts that do cover the weekend, actually. Do you think this correction can still take long? Let me have a look here. So the minimum time target. So this low here was made on the 1-to-1, which generally for a wave 4 is the minimum time target. For the people that weren't here at the beginning, this is then what we're talking about. So you can see my box was aligned against the 1-to-1, which generally, this is a FIB time taken from the start to the end of 2 to the end of 3. It is common for 4 to be longer in time than 2. So preferably you finish 4 after or on top of the 1-to-1. Therefore, this low for me was a low probability end because it's straight line down. So we made the current low here on the 1-to-1. It's just tricky to end a corrective structure at this low. Arguably, probabilities are higher that if you do end something, the most bullish count would be the count I shared, being the WX Why? It's just from, and and then you go, it's just not the greatest probabilities. So your shortest time-wise corrective structure is the bullish one. It's just not it doesn't have the greatest probabilities. So then, this is what you're looking for. And then you end the correction and you go up. But after a WXY, you expect the high to be taken. But if you compare all of the polylines, right, these are all if you just join, these are all the scenarios, right, from an Elliott wave point of view, summarized in a bunch of lines, making it very easy to see. And you can see the green line, right? The green line is an option. That's your bullish scenario. It's just that even your bearish scenarios, higher probabilities, would look for a bit of a bounce. There's only one scenario where you continue down. It just doesn't have the highest probabilities. Now, depending on this structure, you then look for potential all-time highs or not. It depends on the structure to the upside, which, of course, we will analyze if we get it. So, yeah. Pleasure, Ice Cubes lady. Pleasure. Yeah, thinking out of the box, right? Wave 2 in 2025. I do expect the bull market top to be made in 2025, preferably March to October. It's a big range, but we'll get in more detail at a later stage. And preferably then make one, potentially two more all-time highs. If you make one more all-time high and then start ranging correctively, I'd look for one more. But then that's where eventually we want to see a bit of a retracement. This is weekly time frame stuff. So was it this one? No. So this is your bullish scenario. This would be 3 pushes, but I mean, this is pushing it, I suppose, because look at the size of your twos, and 2025, not to forget, 2025 is still here. These ranges are very big in time, and commonly 4s are bigger than 2s. Now, of course, because your 2s are big in time, 4s can be smaller, but you still want your 4 to be at least hitting the 382 minimum, which is already gonna take months. So twice you're gonna have months of sideways price action plus the impulses, which also takes time. So yeah, this would be 2026 basically. While on the other side, having a 1, 2, 3, 4, 5, right, and then eventually top and then get a retracement would make more sense. It's just about how many 4, 5s do you still get. So yeah. Okay. You should have a combo, hard copy and PDF. Yeah, we'll think about all of those things. Yeah, absolutely. So we're currently working on a Elliott Wave Compendium, which basically is sometimes I share a little sneak peek, but it is currently 56 pages long. And a compendium, in case you don't know, a compendium is basically a very to-the-point, concise book. So instead of a lot of text, it's incredibly to the point, and there's more information about every Elliott Wave structure than you will have ever seen in any other book. So all the structures, of course, are mentioned, both bullish and bearish graphs as well. We talk Fibonacci, a bit about introduction Elliott Waves, about Fib time. We have the volumes in there, Fib times in there. Where are they positioned, every structure? What are the common targets? What are the rare targets? We have a probabilities table. What structure is common, less common, uncommon, rare, all that stuff. And everything that I talk about in content videos, and it's all in there. So all the knowledge is dumped in that book, which is then called the compendium, as it's very to the point. So we're developing it. We're quite far, so I get in the first 6 months of this year, it should definitely launch. Probably March, April-ish. April should be the PDF downloadable version, and then the hard copy should be later, because I have to set up a publishing company. I want to publish it myself. How do you trade? If you Elliott wave Elliott wave theory does take time to develop, yes, because you have to first of all understand the theory, then be able to implement it, and then know probabilities. So that takes a lot of time. Do I use the higher time frame? Yes, but my favorite time frame to trade, even with Elliott waves, tends to be the 1 hour. But I also have, from a day trading perspective, I use the 15-minute as well, because I trade Elliott waves, just as pure as it is. But I also have other strategies with other tools, including Elliott waves, that I use in my trading. Pleasure, Ivan. What's up, AH44? No, I gotta go. Guys. Do you combine high time frame FAGs? No, I don't. I do keep an eye on gaps, but those are not necessarily fair value gaps. It's just gaps. I used gaps before the fair value gap things came in, so I probably use it differently in a way. But I do look at gaps, but I wouldn't call them FVG, fair value gaps. I have no problem with ICT stuff, but I don't use any of his knowledge. So here, for example, this is a gap, right? It's a 4-hour gap. The moment you close a candle inside the gap, probabilities are high to fill the gap. Well, but everyone, I gotta go. So we started the Bitcoin analysis at around 17 minutes. I will put the timestamps in the VOD of the live stream. So thanks for being here, all 180 of you. I really appreciate you guys hanging out, asking questions. And if there is more, we're live every day. Videos are online every morning. If this is your first time, so a lot of content. But tomorrow morning will be a new video. If anything crazy happens tonight, I will consider going live, because we do have the FOMC news at 8 p.m. Central European time. So I will keep an eye on the chart. And depending on the reaction, if anything happens, I might consider going live. But at the moment, it is not planned. So just so you know, not planned. So Arbuzny Sok, yeah, always another one. Man. So thanks for being here. Thanks for hanging out. Trade safe, right? Especially tonight as well. Everything has been covered in this live stream. I'll put the timestamps in when I close it down. And thanks for your time, and I'll see you at the next one, which will be tomorrow. Tomorrow morning video, tomorrow afternoon live stream.